All right, good morning, ladies and gentlemen. Merry Christmas, Happy New Year. Thank you for being here on the morning show. It is the best morning show in finance. They're telling us it's the best show at all in finance. So we appreciate you. We appreciate the support and all of the feedback. We're right here talking about what's important in the market as we close out the year and get ready for Q1. Hit it, Spencer. Get him. Get him. No? All right, we are back, baby. They thought they could get rid of us. They thought wrong, Mr. Steve Strazza. Haven't spoken to you in a few days. Merry Christmas.
Merry Christmas. Happy New Year.
Where in the world is Carmen Sandiego this morning?
We made it to Connecticut Friday night. And by that time we both had terrible colds because we did Christmas at Rose's sister house, and it's basically like a daycare. So we both rolled in with colds, and we're on the mend now. But we're in Connecticut. We're at my parents' house.
Best pizza on the planet, right? Is what I'm told there in Connecticut. Is that true?
I stopped and got Colony Pizza after a 9-hour drive at about 9 o'clock at night Friday when we were rolling in. Yeah.
How'd that make you feel?
Fat. Really fat.
Are we in the Steve Strazza bedroom where you grew up? Is that what that is behind you? Is that the little Steve bedroom?
It actually is. It's been converted into an office now, but this was my bedroom for many years. Yeah.
This is where you would go after you would hog the ball on your basketball team, as your father tells us. Then you'd go sleep there and rest.
I got
Look at that.
All my old goodies in here. Yeah.
Look at that, Steve Strazza back in the old stomping grounds in Connecticut, Mr. Connecticut over here. Long way from Key West, no question. Well, here we are in that odd time of the market where you tend to see whippy markets, low liquidity. We're looking for extended trends that tend to extend just a little bit longer than maybe they normally would if it wasn't this time of the year. And then you get those epic reversals at the beginning of the year. And one of the pushbacks I've gotten is like, well, JC, I thought you never fight trends. Well, I guess you thought wrong, because we certainly do fight trends. And what I want to just reiterate, whether it's whipsaw hunting season or any other time of the year, there's nothing wrong with fighting a trend. But hold on. But if you decide that you want to fight a trend, first of all, you better have a good fucking reason. Like you better be sure, and you better have a really, really good reason, number one. Number two, you better have very well-defined risk parameters and literally write it down what the market would have to do to invalidate that thesis that you have that is justifying you fighting trends. Again, nothing wrong with fighting trends, but you better have a good reason, and you better know what the market would have to do to prove you wrong. If those two are in place, I don't have a problem with fighting trends. Do you?
I would agree with all of that, and then I would add to it that we can move the goalposts a little bit, right? There are trends that are in place that are often competing on different time frames, right? So you're talking more about the short-term, more tactical trend here, right? We'll have a different playbook for that, different objectives, a different plan, and we're playing much shorter-term trends than maybe we normally are in this environment, in terms of whipsaw hunting season, at least.
Yeah. But just in general, yeah, no question. Multiple time frames, 100%. All right, Spencer, why don't you hit it? Let's hit the state of the markets. Please, if you will, my good man. All right, we've got the Dow futures this morning down 1%. That's over 400 points to the downside for the Dow. S&P 500 futures down 1.2%. 72 handles to the downside, under 6,000 for the S&P 500, by the way. NASDAQ 100 down 1.4%. That's 300 points to the downside. 21,400 for the NASDAQ 100 futures. 30-year bond futures up 50 basis points, up to almost 114. Crude oil up 50 bips, up to 71. Copper down 1/3%, 410. Gold flat, 26.30. Silver down 0.75%, just under $30. with the VIX. Hate to quote the VIX in percentage terms, but the VIX is up 15% this morning, up above 18. And over in funny money land, you've got the Bitcoin down 600 points, 93,000. Ethereum flat, 3350. Solana flat, just under 190. Binance flat, just under 700. With a total crypto market cap, Spencer Israel, I know, lingering back there somewhere, 3.17 trillion. With the Bitcoin dominance, my friend, still at 58% here for the Bitcoin dominance, still relatively high. One more thing I wanted to point out in the futures. Do I have this right? Natural gas up 16% this morning, up 50 cents. Do I have that right?
Is that really?
Do I have that right, guys? Yep, we've got that right.
Yeah.
Yep, monster move this morning for natural gas futures. Absolutely ripping. Anybody want to weigh in on what's driving that natural gas limit up this morning? And what else other than the natural gas stands out among the futures?
I think it's been a snooze fest for the cryptos. They're still just hanging around.
Which is not a bad thing.
No, I think it's fine. But for the stock market, I mean, how important is a Santa Claus rally to you? Because I know that the Santa Claus period just began, but it's not looking good.
Last year, Santa Claus didn't show. The market
wasn't it flat? Wasn't it like basically unch in the Santa period?
No, it was basically unchanged, but it was technically down. It didn't go up. Stock market did just fine. Now, with that being said, when Santa don't show, historically, all that means is that there are going to be opportunities later on in the year to buy stocks cheaper, and that was certainly the case, right? You had a lot of weak breath, a lot of stocks not going up in the first 6 months of the year, right? Things really got going later on in the year, and we saw that, so I guess that makes sense.
I'm not seeing anything on natural gas. Cold weather forecast. JC, I don't know about you, but like it's warm here. It's like 45 degrees in Connecticut right now. I brought the warm weather with me, baby. You're welcome.
My wife this morning had the heater up to 72. I'm like, are you out of your mind? Are you out of your mind, woman? What's the matter with you? So we turned that down to 69 real quick. What about the dollar and what about the US dollar and rates? I mean, we had a meeting last week. We have our internal team meeting once a week. Last week was Thursday, the day after Christmas. This week will be Thursday, the day after New Year's. So we've had to reschedule our weekly meetings twice in a row here. But nevertheless, one of the big topics that we were talking about was, potentially the US dollar being the prime candidate to win whipsaw season this year. Think about the prerequisites. You're looking for extended trends. The dollar's had quite the move higher. You're looking, for key levels that it could lose. The dollar has that, slightly breaking out above those former highs around 107. We've got all of that. I mean, this is prime, not to mention the commercial hedgers, super, super long euro. So you got the dumbest money in the world betting on rising dollars, smart money betting on the opposite, extended move. Think about what the implications for the overall market from a global macro standpoint, from a U.S. equities perspective, what a collapsing U.S. dollar would do to other assets is how I like to think about it. And the other way around, what if it's not? What if it's not the U.S. dollar this year, even though it's the prime candidate, in my opinion? What if it's not and the dollar rips? What are the implications there for the market? So these are the sorts of things that I'm thinking about over the holidays, as one does in my position. What about yourself, Mr. Strazza?
No, I think we have to be fair to our process here. We talked about this range in the dollar, and we talked about what it would mean if it resolved lower. And we also talked about what it might mean if it resolved higher. It has now resolved higher. Can it fail? Sure. Doesn't look like it's failing, at least not to me right now. So this is the single most concerning chart in the market for me right now. I don't like it as a risk asset.
Chart in the market for you right now is the United States dollar.
What was that? Tech support. What was that noise?
Was that Spencer snoring? I think it was Spencer snoring.
Spencer, get it together.
Get it together, Spencer. You haven't even had a child yet. You're already losing sleep. Like, wait till the kid shows up. You're done, bro. You're done.
And one hole in the chat. Absolutely right. I understand that this is being driven by the tariff talk and among other things, right?
What is it that's being driven by this so-called tariff talk? Explain that to me again.
U.S. is talking real tough on tariffs these days, right? So that's a strong dollar platform, really, that Trump has with tariffs. Even my cat's sick. She's sneezing up a storm.
Is that who that is? Is that your cat sneezing?
Everybody's making noises around me right now. Okay. Yeah, the dollar breaking out of this range, regardless of why or what, or if you disagree with whether it should be breaking out with the tariff news and this and that, it's broken out. This range is resolved for now. That's not good for risk assets. Can they still work? And now you're hearing, a lot of analysts, strategists come on and say, oh, don't worry about it. Risk assets are doing just fine. I don't know about that. I think that's dangerous talk, to think we've been waiting for this range to resolve for so long. Now it's
on the mic or no?
We're seeing stronger dollars.
Hold on.
What the hell is going on? Tech support. I'm so sorry, guys. It's a strange week between Christmas and New Year's. I don't know where Spencer is. I think he's in a undisclosed location in a hotel like I was last week.
I'm in a hotel running off crappy hotel Wi-Fi right now.
Where are you, Spencer? Why are you?
I'm in Michigan. I'm in Michigan.
Oh,
I'm in the great state of Michigan. Yep.
It wasn't cold enough where you live?
No, dude. We got here. It was like in the mid-50s. Dude, like you said, it was crazy.
Right. Yeah, I'm shocked, actually. It's about the same temperature here today as it was when we were in Jacksonville last week. Do you know that? Because North Florida is basically like New England.
Yeah, this is not natural. In any case, I think JC is back.
I don't know.
Maybe.
Do we have any news that we need to hit today? I can run.
Not really. Like you said, it's very quiet. The only news is really just a public service announcement, everyone. If you didn't see it by now, January 9th is a national. So the stock and the bond markets are closed on January 9th.
How's China doing today? Trump urges Supreme Court to halt the TikTok ban while his administration works out a negotiated resolution. Interesting. Throw up the European charts. Talking about most concerning charts, I'll just do a state of the markets rant here. Right. On the theme of most concerning or most bearish charts out there right now, which for me, we just talked about, dollar ranks number one. We lost developed markets in Europe, developed markets outside of the United States. We lost these groups in late 2021, right before all of the major averages peaked and rolled over in the United States. And that distribution pattern, when the market topped out and rolled over, this marked the end of the last bull market, looks frighteningly similar to the distribution pattern that is playing out and completing, at least for now, right here today. It's the same pattern. It's taking place at the same place. This is the MSCI EFA index. You could look at the Fez, right? So the Euro Stoxx 50. You could look at the Vanguard Developed Europe Fund, the VGK. You're going to see very similar things. You could look at a lot of the individual developed European country indexes. It's going to look a lot like this. These are tops. If they are completed tops, it should be a concern. This is something that you should think about, maybe even keep you up at night if you're really long, okay? You don't want to lose the leaders out in Europe. And I think if that dollar's going higher, you are going to lose them. I think you're going to lose a lot of other things in the coming weeks and months, if that remains the case. I want to see these two trends reverse. So this one, I want to see reverse, fail this top and move higher as a risk asset bull and back to the dollar. In that environment, I would suspect that this Dixie chart is failing this little bull flag that's in right now. Throw up the Dixie and then falling back into the box. We're really having some troubles here today. All right.
How about now, guys? You guys hear me all right? We good?
We're not going to throw up the Dixie chart. Who's running?
You guys hear me? Are we not good? Are we not good? You guys can't hear me?
I can hear you, JC.
Oh, all right, great. Glad to hear it. Glad to hear we're back. What are we going to do? What about, speaking of international, are we going to talk about the new all-time highs in Israel? Is that something that we should focus on?
No, it's not, because I think you're cherry picking with these new highs in Greece and Israel. No, stop. Look at the index that I just.
All right. How about Taiwan? Go to slide 2, please. Go to slide 2, please. Taiwan pushing up against new all-time highs. You're not impressed with a 7-month consolidation in Taiwan and it's pushing up against new all-time highs?
So what about
Mike,
all
is
of
this
these
cherry picking also?
What about, first of all, I can't buy this. Okay. You're showing me things in other currencies that
Don't
don't
be such
matter.
an asshole. You
That
know
don't
what's in
matter.
this index. Don't be a
Yeah,
dick. You know
Taiwan
what's in this
Semi.
index.
Yeah, a giant semiconductor company and then a bunch of other things that don't matter because
What
the
about
semiconductor
Taiwan
is so
Semi
large.
Junior that you were all geeked up about last week?
Listen, I'm super long and super bullish semis. This
So
means
is this cherry picking?
I have to buy semiconductor stocks in US dollars. I don't know about you. I don't know if you're able to buy them in Taiwan dollars. I can't do that. I don't do that. I have to buy them in US dollars. So my chart of Taiwan stocks actually looks a lot more like a top and a lot like the one I just showed of IFA than this one in their local currency.
All right, throw
Look,
up here.
do you,
This is a big thing, though. This is a big theme here.
do you
Whether
think these top,
semiconductors, whether we get rotation into semiconductors or not, is going to determine a lot coming up. Throw up the news slide 2 here.
you're
So
right about
this
that.
is that major top. Whether it is or whether it isn't, it's going to determine, what technology and, in my opinion, U.S. indexes are going to do. This looks like a rounding top. This looks like a head and shoulders tops. This looks like a lot of things. Semiconductors on a relative basis. So when I look at Taiwan, that's a lot of semi looking strong and hanging in there pretty good. Doesn't that suggest that this is likely not a top?
I don't know. No, because EWT doesn't look like that. You have to look at it in dollars, my friend. You gotta look at it in dollars. It's hard to say. If you were talking to me about EWT, right, which is Taiwan stocks priced in dollars, as this chart is also denominated in dollars, I would agree with you. But it doesn't look the same. Look at EWT.
No, I understand what EWT looks like. EWT looks like the equally weighted semiconductors index.
But it's dollar, right? So it's dollar. Because you're sitting here saying, oh, when you remove the dollar, it looks fantastic. I'm saying the dollar's a problem. The dollar's being a headwind for international stocks. And then when you look at the chart in dollars, EWT, it doesn't look good.
Do you think that they step in and rotate into semis, or do you not think that?
I'm actually in VinFast right now. Funny story. Do they rotate into semis? I think they have to, JC. I think rotate into semis, or you start hearing us come on here saying things about the bull market potentially being over.
Ooh, they don't rotate into semis, then bull market canceled.
I think it's that bad. And I'm prepared for it. This could be just an abbreviated cycle. We could go through some sort of situation here. We've had 2 great years back to back. And all of a sudden, over the past 3-4 weeks now, things are not looking so great. So I'm prepared for it. We'll see. It's not my base case. I don't think the market's going to roll over, but I'm going to respect the charts. And the more tops I see, these in Europe don't look good. This here, semis on a relative basis, doesn't make me feel warm and fuzzy inside. We're going to make a list of these tops. Right, we lost.
Throw up the new slide 4, and then we'll go to slide 5. Throw up the new slide 4, since here we are. JC's cherry picking unimportant market indexes that are not priced in dollars. Hold on, I'm cherry picking unimportant indexes that are not priced in dollars. How about Israel and China both beating the United States this year, priced in U.S. dollars?
I respect this. This is
this one's okay. This one's okay.
This is real. This is real. Your Apple. This is apples to apples, at least. So thank you.
I do what I can. Do what I can over here.
It's beta, right? Isn't it really just beta? Typically, China is like tech stocks or energy stocks. When China is working, it's usually on top of the leaderboard, right? And when China is not working, it's usually on the bottom of the leaderboard. China's not.
I would say Israel. You're going to make a better case that Israel is beta. China is just its own animal.
China is the definition of beta, though. I mean, these stocks up 10%, massive correction.
Fine, but not like directionally where like, U.S. goes up 1x, China goes up 2x. Not like that beta. Is it higher beta than the U.S.? Yes, but it's not just like a higher beta play on equities.
Here's the thing. As we enter the new year, buyers need to show up to all of these trends that we're talking about. Buyers need to show up and save these tops in Europe. Buyers need to show up and buy this dip in China, right? Buyers need to show up and break out this base in equal weight semiconductors. Like, we're there. We're set up. We're ready for it. These tops need to be continuation patterns. The dollar needs to fall back into the box. And these breakouts that were in place 3, 4, 5 weeks ago after the election need to get back in place, right? Because we broke out. We had these massive moves. Bases were completed. Small caps are making new highs. We're talking about the Dow transports again. And all of that progress came undone, right? So we're in a weird place right now, where I think we do need to be on high alert for some sort of rollover here. You know, Sean made a good point on our meeting last week, JC. Sometimes we see like a big directional move as soon as we turn into the new year. I'm really, really interested in what the first couple of trading days kind of have for us. If they send them lower, if they start breaking down some of these tops, if they shoot the semiconductors, if we lose the Mag 7, look, this is really, really different. I'm starting to get late 2020, early 21 vibes here, right? So I'm looking at kind of the things that happened then and comparing it to today.
2020,
It's so different.
Hold on. Late 2020, early 21 vibes. Why?
We had this massive momentum thrust, so many breath thrusts, right? But we did have
so many.
Okay.
Thrust on thrust.
Everything started working after the election, right? And then it's fizzling out. And then you get these big tops in Europe, right? And we're talking about, was that a fall day last week? We're on the phone with Mike Hurley. So I'm thinking to myself, is this 2021-ish, right? And it's not. I'll tell you why. Look at the riskiest stocks in the market. They were already down 50% when these things were in place last cycle, right? When Europe was completing a top this time last cycle, ARK was in a 50% drawdown.
Well, this was at the end of 21, to be clear.
Yes, at the end of 21. ARK had peaked end of 20 or early 2021, probably February
21.
Yeah. So already in a massive drawdown. The riskiest, most offensive groups of the market were already taken out back and shot, right? By the time Europe was completing a top and semiconductors were rolling over and all that stuff. Right now, that is not the case at all. Speculative growth stocks are the hottest game in town. They're trading right near new highs. Altcoins need to get it together. Crypto needs to get it together. But if you look at the cryptos, look very different. They were printing massive tops at this time too, back in 2021, right, when the market was rolling over. Cryptos just came off a massive surge, have given a lot back for sure, but totally different chart setup situation. So it's a fun thought experiment, but everybody wants to compare something to something else, like all of the .com bubble analogs that we get every cycle, especially this cycle with AI. Oh, it's just like 1999. Today, the patterns in Europe do look like they did in early 2021, but nothing else really does. So I think that's an important qualifier.
When you talk about like the riskiest stocks, can you throw up slide 5, please? What does this mean to you? Because this is a big one, in my opinion, for the bulls and the bears. Hard to be overly bearish if this is making new all-time highs. Again, you probably want to lean on this bull market remaining in place if we're making new all-time highs. So just to reiterate, we are looking at the equally weighted consumer discretionary index relative to the market cap, the equally weighted consumer discretionary index relative to the equally weighted consumer staples index. So discretionary, where we spend our discretionary income, home builders, automobiles, retailers, and where staples, where things we're going to buy no matter how bad things are, beer, toilet paper, toothpaste, right? On an equally weighted basis, eliminating the Amazon effect, eliminating the Procter & Gamble effect. This is equally weighted, broad-based look, breaking out of a multi-year base, 2 new all-time highs, which, correct me if I'm wrong, there's a lot of things in the market that kind of look like this. Some of them are failing. This one has not. Quite the opposite. New all-time highs on Friday. Yeah,
so I like that, JC. And this is another thing, like we're talking about back in 2021. This is incredibly healthy. This is a very, very positive development, getting this big breakout in the books here. Sure looks like a valid breakout in this ratio for now.
How bearish can you be with this making new all-time highs?
The good continues to outweigh the bad, I think should be the message here. Would you agree with that for everybody?
The good
outweighs the bad.
Outweigh the bad. That's probably
significantly, right? So the list of bad might be growing, but it's still far outnumbered by the list of good. We don't want to see those two lists kind of get on par with each other.
I would agree. Yeah, I would agree.
This is at the top of the list of good. This is at the top of that list. Very good. Very good stuff here.
Lithuania making new all-time highs. Not interested? No. Prague making new 16-year highs. Not interested?
Is Kenny here?
I don't think. Do we have Kenny on today, or is Kenny taking an extended holiday leave? New Zealand new multi-year highs, by the way, for those keeping track at home. Clearly, Brussels pushing up against new all-time highs as well. Let's go to Kenny for a quick hit on what's moving this morning, what we're trading, and then we'll go to Mr. Mike Zaccardi. What a day. What a day back on the morning show. Let's bring him on. Bring on Kenny.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house. How was the lasagna, my friend?
That was a long time ago. What's going on? I've been to 2 back-to-back fish shows, so I'm still feeling the groove right now.
Dude, how many fish shows have you been to in your life?
Not as many dead shows, but I went to back-to-back. Haven't gone to back-to-back concerts in a while. I usually skip a night. Me and my boy, we went to back-to-back fish shows. We just got back a little while ago.
Where?
MSG.
Oh, nice.
Yeah, good times. They put on a great show. If you've never been to Fish Show, the best thing about Fish, you don't have to know one song. These guys are so tight as musicians. They just rip it for like 3.5 hours. It is just a party.
And did they play the same set both days?
No, different set every show. They never play the same set. That's what attracts everybody to go see Fish shows more than once.
Wow.
Yeah, 50 years of playing the Dead, they never played the same set twice. So it's just, they're always varieties and always different. There's combination songs that they do play historically, but always a different set. So much fun.
That's good to know. Good insight. Good insight there. Mr. Kenny Glick. So here we are. It is December the 30th of 2024.
Yeah.
And, we've had, we're low liquidity markets. Rest in peace, Mr. Jimmy Carter. Looks like we're going to have a market closing on January the 9th is what it looks like. So it's a week from Thursday, right?
Oh, wow, they actually closed the market. Incredible.
They do every time a president passes, they do that.
Yeah, I read that. I didn't remember that. That's nice.
Well, it doesn't happen that often. So who's the last one? Bush?
I guess, yeah.
Yeah.
Big Daddy Bush.
Yeah, it was like I remember it was like right after the New Year's. This time they're extending it a little bit more, but nevertheless, so this time of the year, like, how are you thinking about things? Are you taking advantage of the low liquidity? Are you doing less because of the low liquidity? Like, are you looking for more opportunities? Are you trying to be more patient? How do you think about this time?
Well, I tell you, I thought Thursday was going to be boring. It was one of the best trading days of the year. Friday was a little bewildering, I guess, because we don't really see that kind of selling. But we kind of sat around, teaching people what to look for, how to pick some bottoms. We were talking to Andy Dufresne most of the day. Me and Solid just did more or less an 8-hour symposium about trading. So again, the idea was when there's not much to do, you got to take a step back. It's always okay. As a day trader, some people forget that it is a raging casino, and you kind of want, if you're sitting here, you want to put some action on. That's sometimes you just got to have somebody to swat your hand away from the buttons. And Friday was kind of like a lazy day, but we found opportunities. So same kind of thing today. I'm kind of shocked at the market being down this much. We don't see it too much. Not since 2018, I think, we had a little bloodbath Christmas holiday season. So I'm coming in, look, I'll show you some charts. We're right back to where we were. On the Qs, I'm going right to the Qs because that was my fave. I don't know if the charts are up. Let me just see if I got them up for you.
Yeah, throw those up.
Bang, bang. Hang on a second. Boof. So yeah, we're coming like full circle. We're right back down to these levels from just a couple of days ago. So if this gives way, we got, maybe we do get a little bit more selling at the open. But if we get down at 512.50 on the Qs, I'm going to look to put up a stand. But really the correlation, my friends, if your eyes going to be sitting around trading today, just watch the UVXY. It's the biggest tell there is. So now that we're trending up again, if we're above 22, you're not going to want to buy today. But if you see the UVXY crashing right back down under 20.5, let alone going negative today, we'll probably have a nice sustainable rally and all the fear will dissipate. So is there something going on that I don't know about that we're gapping down this much?
The usual Federal Reserve, tariffs, the Trump, China, Israel. I mean,
Oh, same stuff. So yes,
the usual.
So there's nothing to worry about, right?
Yeah. War in the Middle East, like if there's that's something that never happens.
Yeah. Well, it is. I'm actually going to look at some of the quantum stocks that did run out of steam on Friday. They are really been trading independently from the overall market. It's kind of like the Qs were weak. The quantum stocks got stronger, and then you had the inverse where the Qs were weak and the quantum stocks actually stayed strong. I'm looking for some sellers. Some of these stocks that we've been trading are 35-cent stocks that are at 350 right now. So look at RR. I need to short something.
Rattle through some of these names for the folks who haven't been participating in the quantum stocks. So you got RR. You got
Yeah,
the
and
ringgit.
speaking of that, we have the room open today, guys. If you want to hang out, I'll be here all day until I fall back asleep. I'm going to have the room open tomorrow too for free. So we're going to just, keep the education going for the next couple of days, putting the idea generation on the back burner, but it always comes. But yeah, some of the names I'm looking at is the big daddy is QMCO now. I just absolutely credible. This was $1.80 stock. It went to $90. I'm looking for a borrow on this one today. Again, you blew the top off on Friday at $90. Absolutely ridiculous. This thing has very low liquidity, so be careful with this one. You're going to have to get a borrow. But as QMCO goes, so goes the whole realm. So IonQ was the king. QMCO is now the king. So watch the two big daddies, and then you go to the lower ones, which is the rigatonis, RGTI, which has been a monstrous move. Another one that was a buck. This thing went to $20, RGTI. Then you got QBERT, QUBT, which had a nice move. This one ran out of steam a couple of days prior to everybody else. Another $2 stock that went to $27. So again, giving back 50% on these names is not going to be hard. So I'm looking for that opportunity to look to short some of these QBTS and a lot of these new ones now. They've created option chains, so you don't have to trade the stock if you don't want to. And again, I like trading options on these names. They're very liquid, and they've been creating half-point increments. You can get right in there where the stock is. Here's another one. So RRs on the robotics. You got Serve, had a really sick move over the last couple of days. This one was kind of like hanging out. That's robotics, but RR is more robotics. And then our new friend, what was it? We had Kit came to life in a massive way. But speaking of liquidity, what was interesting about this one is that if you guys trade all day like we do, sometimes these stocks, when they get stronger into the close, then the lack of liquidity in the aftermarket, the volume explodes, but it still trades illiquid, and you get these crazy moves. We were in this one from $1.80 to $2. We were already happy with 20 cents, and it just ripped another $1 in the aftermarket. And then beautiful, just nice double top the next day, and just got absolutely hammered right to where we bought it. So pretty awesome. So these stocks are all over the place, and they're cheap, and you're able to get, a lot of these are shortable. So a lot of fun still out there. That's the list right now, right there. But I'm going to stick with the Qs because, bloodbath opens. Usually you'll get some more selling at the open, and then we look for a buy. So I'm still mildly bullish on the day. It's strange to hear me keep saying that, but we're going to have some discussions about what we expect next year. But I think it's all about the banks. We're going to be right into earnings season on June 14th. And what month is it? January 14th. And, we'll be just staying independent to each stock. So, but today I'm looking to buy, like I said, big red.
I find I'm fascinated that you don't give a shit that it's December 30th.
No,
I think that's great. I think that's great. I was really curious to see what you would be thinking if, like, you're kind of changing your strategy, maybe pulling back a little bit. You don't give a damn at all.
No,
LFG.
Right. And that was the one thing when I was talking to Jeff Bishop from Raging Bull. I hadn't spoke to him in a couple of years, and we started getting into a conversation. He's like, oh, so nothing's changed. I'm like, no, nothing's changed. We know what we're doing. We trade VWAP. We trade range breaks. We're looking for the action, and pretty much every day is the same day. So, like I said, I think it'll be a little boring, so we might not get that enthusiastic snapback rally today, but keep an eye on the VIX and the UVXY. If they start to tank, we'll probably get a tradable rally. We'll call it a day, and then we'll rest up for tomorrow. You guys, you partying on them or what? I know you got 3 little kids now, so
partying's a strong word. We're supposed to go to some peep fest,
right?
Whatever that is. I don't know. I mean, are they like those Easter like marshmallow things? I don't know.
I think something different when you say peep. I'm not sure, but my kids don't want to be there.
All right. Yeah, I don't know. I got nothing, man. I got family here. I got twin 2-year-olds. I got a 4-year-old. Half of them are sick.
Oh man, yeah, we're going full EDM here at the Glick household. So all my daughter's home, my son's home. They're bringing all their friends all day. I put together about an hour and a half set list, and my wife comes in from the other room. She's like, "So these songs don't have words?" Like, lady, who are you?
Where you been, sweetie?
So she's gonna be she'll be in the other room probably just hanging with her friends. But we're gonna be going crazy on the dance floor at the Glick house. Hey, if you're in Marlboro, stop by. Open house, baby. Let's go. All the tequila and house music you could take.
Tell the folks once again, if you guys want to drop the link. I know that Mr. Kenny Glick is hosting everybody these days. So anybody who wants to see the magic in real time throughout the day, is there a link? Do they email Spencer? What is the what is the protocol here?
Yeah, drop the link. I think if you drop the link in the room, it'll get you free access to the website for the next 48 hours. And then if you're nice, we'll even let you in another day. But yeah, just drop the link or email. Yeah, get Spencer to do some work here this morning. So if you guys don't have access to the room, just
I will drop the link in chat in the moment. I will drop the link in chat. See you, Kenny.
God, the John Facenda of technical analysis here, Mr. Spencer Israel.
All right, boys and girls, you guys have fun. I'll be in the room, so get your steroids. We'll probably be here all day like we always are.
Love it. I love it.
All right, guys.
Kenny,
Happy New Year if I don't see you, and be.
And he's gone. All right. So what'd you think about that, Strazza? Are you surprised that he doesn't care what day of the year it is?
No,
I am a little bit. I was a little surprised. No.
Trying to figure out my lighting in here. I will say about Kenny that my dad has been dropping into the room because Kenny's giving away the free room access and really enjoying himself.
Look at that, Mr. Strazza, slinging quantum stocks and shorting the UVXY with Mr. Kenny Glick. You're reiterating how much cooler your dad is than you.
Yeah, he's having a great time in Kenny's room.
As Strazza takes a bite of his bacon.
You saw that?
Unbelievable, Strazza. You really can't even wait. Like, you're that much of a fat kid that you can't even.
I didn't mean to.
9 o'clock and he's eating like he hasn't eaten in a month.
I got to move it away from me. It was like, what do you call that? I didn't mean to. It just happened. Like I just grabbed the bacon and put it in my mouth.
Oh yeah, I have no control over my bodily functions. Just the bacon is there. It just goes into my mouth.
You know, you got to eat it before it gets cold, though. Who wants cold bacon?
Anyway, cold bacon.
I went on a recommendation of the one Spencer Israel. I stopped at a pit beef.
Yeah.
Situation in Baltimore.
Yeah.
You're driving
Which
right
one'd you go to?
What was it called, Spencer? Chaps?
Chaps.
Have you been there?
That's the famous spot. Yep, Chaps.
I have a picture. We'll show it for recess.
Yeah, Steve, how was it? How was it?
Like it was excellent. I wasn't like blown away, best barbecue ever, but it was super cool about how it was featured in The Wire season 2. I didn't know that.
Was it?
It was just a super cool joint. I got the sandwich, like the pit beef sandwich. Dude, there's so much meat in there. It's absolutely insane. I was driving. I almost fell asleep while I was driving home after eating that sandwich. Rose had the ribs. It was awesome. That was a great recommendation. Thank you, Spencer.
You're welcome. All right, Mike Zaccardi. We got Mike in the house.
Do it.
I'm trying. It's not letting me bring it. There we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, there he is, Mr. Zaccardi. How are you, my friend?
I'm doing well, Mr. JC. How are you guys doing?
Dude, I love how you're into the weather. You know, like, you know, you really are. Like, you're like a technician, but you're also like a weatherman. Were you a weatherman before a technician, or did being a technician help you become a weatherman? How did this even happen?
Well, my first year of college, I studied meteorology before.
Stop.
Finance. Yeah. So I was a weather bro before a finance bro.
Wow.
In my time, I spent several years as a pro energy trader trading the power markets before I really got heavy into Twitter and all this stuff. So I would always check the latest model runs and forecasts, natural gas, power market trends. So, and this is the time of year to be looking at that stuff.
Can you let's just double click on that right there. Natural gas. What a move. What the hell's going on?
Yeah. So over the weekend we had model runs. These things run throughout the day. So over the weekend, they showed much colder temperatures looking out about 2 weeks. And it's always a little sketchy if those will be accurate or not, but they've been holding firm on like a solid Arctic blast coming in mid-January. And the markets are telling us it's real. So this morning we're seeing 17% price move in natural gas. I was looking at UNG, which is, it's a little funky, but it's pretty good for like day-to-day tracking of natural gas. It's looking for about its third best day in its 18-year history today. So wow. UNG is on the move. But I mean, like you said earlier, like we're dealing with, low volume, low liquidity markets right now. So we could certainly see that get super whippy as today goes on. But, 9 o'clock Eastern time is the key time, especially Monday mornings in the winter for natural gas and crude oil. That's when the pits open. So as of just a few minutes ago, we're still seeing that strength hold, still looking at a 55, 60 cent run up in gas holding through the open of pits here this morning. So, that's encouraging from a bullish point of view. And another thing with the natural gas is we just had the January contract roll off. We're into February now. February typically trades a little cheaper than January. So the fact that we're up here near $4 for February is all the more impressive. So what we're looking at here is a chart of February 2025 natural gas futures. So this is not the continuous chart of futures. This is just February.
February alone.
This gives us a good look at just how powerful this move this morning is. So this is the highest going back to June, far above any level we've traded at so far this winter. So yeah, the cold is on the way. So if anyone's bored with markets here this week, natural gas is not going to be one of those sleepy markets for sure. So be on the lookout. And so whenever we're talking natural gas spiking in January, you got to look at then like OJ futures. That's always a fun one to take a look at. So those could be on the move too. We'll see how it all plays out. But yeah, January is always super fun in the energy world.
How else has being a weather bro before a finance bro sort of translated into your work? Is it just an energy thing, or you just mentioned orange juice now, but have you found that it, makes an impact?
Yeah, I always say there's a lot of parallels between weather and trading and chart analysis. I mean, because with all this stuff, like we obviously don't know what the future is going to be. We're trying to forecast and use probabilities to our advantage when it comes to this stuff. And when it comes to weather, like we've got all these like weather models and historical analogs to look at. But ultimately, you have to weigh every situation kind of on its own. And you don't want to put undue emphasis on just any one like single model run, for instance. And when it comes to kind of combining weather and finance, like natural gas, when I opened up my computer this morning and saw, and last night and saw gas was gapping up, I was like, okay, yeah. So this, these weather runs over the weekend were pretty legit. So there's a lot of parallels there. At both universes, you're dealing with incomplete information, and you're going to be wrong sometimes, and you have to know when volatility is high as well. Like you have to take smaller, more conservative positions quite often if you're looking to manage risk. And that's something that I did, and my colleagues did on the energy trading floor, certainly this time of year, and then in the summertime as well. And then you start throwing in other factors like what's going on with hurricanes in the summertime, and even macro stuff like the dollar. Like that can certainly impact a lot of energy markets. Not so much natural gas, but certainly what's going on in oil. So there's a confluence of factors that you have to weigh, and I think that's what makes a good risk manager and trader, is being able to manage all of those risks and not to know when to be aggressive and then know when to kind of pull back a little bit.
Yeah, no, it's a great point. Adjusting your position sizing for volatility, incredibly important. How many interviews do you do where they're asking you consistently about the weather? Is that often, or do they, right?
No, this is, it's usually, this is my fun time to talk weather, because it's just always, it always just lines up, like something's going on in weather world to relate it to markets. So it's always an opportunity for me to opine on that. And I know I do some work with Seeking Alpha. Like I write for them quite a bit. And one of my favorite stocks to chirp on in the summer and leading up to the hurricane season is Generac, which actually has a pretty cool seasonal pattern. Like it really does rally right at the start of hurricane season and then into the peak.
Generac?
Generac, GNRC, the power.
Oh yeah, sure.
Yeah, the portable generators.
Yep.
So that's a fun weather related stock, but yeah, not too often I break out the weather maps, but I thought today was apropos.
No, I absolutely love it. You mentioned the dollar, and the dollar to me has been front and center. If you want to throw that chart up there, Fonz, the U.S. dollar has been quite the range for some time, and the market is certainly like that. You know, one thing that we like to talk about with respects to, you know, bond market, forex markets, you know, when they're not doing much, I mean, that's what the market wants. You know, it's big, fast, aggressive moves, and it looks as though the dollar could potentially be breaking out of this range, which could change things. I'm looking at it as a leading candidate for the whipsaw here of the year for this annual whipsaw season, where these extended trends tend to reverse come the new year. Whether it does or whether it doesn't, I mean, at the very least, it's front and center as certainly a leading candidate. How do you think about the dollar? How do you think about the strength in equities despite how strong the dollar has been? Do you think we're breaking out of this range? Do you think I might be onto something with this potential whipsaw? What are you thinking?
Yeah, so it's interesting with the dollar right now. So yeah, we've broken above this key level here. So it's going to be something to watch in January. You know, we'll get a lot of commentary as well from executives during earnings season on how they see the dollar. But yeah, you know, typically Q1 is a pretty solid stretch for the dollar in the last 15 years. So seasonality is on its side. But, you know, you can always go back to the playbook after the 2016 election. You know, we had a big dollar rip into the end of the year. And then, I mean, kind of like right now, there was a lot of talk that, you know, what was going on with tax policy and the trade war, that could potentially be beneficial for the dollar. And then what happened in 2017, we saw the dollar basically sell off over the first 9 months of that year, kind of fooled everyone. So, you know, N equals 1 there. It's not a whole lot to go off of, but certainly sentiment around the dollar now is pretty frothy, given what's taken place in the last couple of months. So this will be something to certainly watch next year. But I would point out, though, that, you know, like you mentioned, stocks have done pretty well given the dollar's move. And this gets us all into intermarket analysis and how that's played out in the last few months. So we've seen rates on the rise, global rate differentials, you know, higher rates in the U.S. versus other countries. So that's been promoting a stronger dollar. And amid all that, the backdrop has kind of been stronger than expected U.S. data. So it's been, in reality, a better kind of macro backdrop for the U.S. market as to what's kind of propelling the dollar here. So typically, when we see a rising dollar, I mean, net, that could be a little bearish for stocks and a lot of risk assets. But in this case, they've kind of been linked. So S&P 500 strength, dollar strength, they've kind of all been there. So if we see a downturn in data, a weaker economic situation, you're likely to see bonds get a bid, you know, rates pull back from this 450, 460 area, dollar retreat. And that could actually be like a bad thing for stocks in the new year if we see a reversal of all that. So I guess my point is that some of these relationships, you know, may not be as intuitive as we're kind of used to them. You have to keep in mind that we're in also an inflationary kind of environment. You know, if you're like me, you kind of grew up in the like mid 2000s with markets, and then through the 2010s, you're used to a deflationary market environment. So the intermarket correlations shift when you go from the inflationary market to a deflationary, or, you know, deflationary to an inflationary market. So yeah, it's going to be a fun year for intermarket, I think, in 2025.
Mike, you mentioned the frothy sentiment in the dollar. Is there anything specifically you're referring to that would lead you to believe that sentiment is frothy?
Yeah, well, I think I came across some commitment of trader data over the weekend that was showing pretty bullish positioning in the dollar, which kind of is, you know, a more
by the speculators.
Yeah, which is maybe a more important indicator versus strict sentiment.
Yeah.
But the B of A fund manager survey was certainly that data was looking pretty strong in terms of what portfolio managers say they think about the dollar, which is the B of A fund manager survey that gets a lot of tweets, a lot of charts get blasted out about that. But it's important to know that survey is just a survey. It's not actually showing how they are positioned. It's just what they're saying they are. So that is actually a pretty good sentiment indicator in my view.
And then how bullish are they of the dollar, these portfolio managers?
Yeah, I don't remember what the exact number was, but I think it was one of the factors that was pretty elevated in that December report.
Interesting. And the commercial hedgers in euro, super long. Right? Euro representing, more than half of the US dollar index, and commercial hedgers are super long, speculators are super short, and then the speculators are long the dollar, hedgers are short the dollar.
Yeah, so we'll see how all that balances out here in the new year with especially given this breakout in the Dixie that could be underway here.
Let me ask you this. I know that you follow the Bank of America Fund Manager survey quite a bit. What else stands out in the latest report?
Yeah, I think I think the big thing there was the dip in the cash level. Folks pretty aggressively, stating they're pretty aggressively positioned in risk assets. It's with I would say it kind of makes sense to have maybe a lower cash position now versus years past where you weren't actually getting anything in cash yields. So stepping a little bit further out, away from cash could make sense. But in general, it was a pretty bullish looking report in terms of what people are saying they were at. So if you take those things as contrarian indicators, it's definitely a different looking picture than it was at the end of last year, at the end of 2022, where there was a lot more hesitation about accepting risk looking out in the next 12 months.
And what about sector rotation? Sector rotation is what's gotten us here. The first 6 months of the bull market back in 22, everything was working pretty much except for mega cap growth. And then come the beginning of 23, you got that massive rotation into mega cap growth to the point where the narrative was that only 6 stocks were working, even though we knew at the time that was not true at all, if you bothered to count, and most people clearly did not. But that's how much rotation went into those mega caps that actually became the narrative. Then you need to see rotation into industrials. You got it. You need to see rotation into small caps. You got it. Right. So all along, whenever you've needed rotation to come in, it's come in. Now we've seen weakness out of semiconductors. When you look at the semi index down over the prior 6 months, you got to see it in certain areas where money's rotated out of. Like, how do you think about that sector rotation as part of the, evidence weighing to decide whether we should be putting new money to work or whether we should be looking for stocks to sell?
Yeah, so like I said, it's been kind of going back and forth, and we've had things like value and small cap step up when we've needed them to throughout the year, and then in the last month, we've seen just this dominance of growth. In the last month, the only 3 sectors outperforming the S&P are discretionary, tech, and comm services. Your TMT areas. We're looking at a handful of sectors: materials, healthcare, energy, real estate. Like, these things are almost flat on the year. So yeah, if you take a look at the whole year in aggregate, you could say that it's a super top heavy market. And one of the charts I like to throw out there is looking at the MAGS ETF, XLG, which is the top 50, SPY, RSB, kind of going down that market cap spectrum. And, the bigger the better this year. But it's we have these really small, intense bursts where we get that broadening out. And it's almost like a refueling for the next stage of an up move. And, so far, that remains generally intact. Certainly the breakdown of breadth in the last month is concerning heading into the new year. JC, like you pointed out, heading into the COVID crash of 2020, in advance of that, we saw really deteriorating breadth numbers. And that's always a red flag, at least a yellow flag in terms of overall market action. but the key thing is you have like other areas stepping up when we do see that happening. So it's definitely on my radar. Like the breadth right now is not a good signal going into next year.
What in breadth particularly stands out as being weak?
Well, just look, one of the things I've been looking at throughout this month and have been posting is the S&P 500 advanced decline going back to the start of the month. We've had just a few positive days with that. So, under the surface, certainly a lot of stocks not acting well. And so if you get...
This is the S&P 500 advanced decline line. Why do you like the S&P 500 over the New York Stock Exchange, or do you not? You're just talking about that one specifically.
Yeah, that was just one that I've been looking at. Certainly, you could broaden it out with the overall NYSE common stocks only one.
I'm seeing, when I'm looking at the New York Stock Exchange advanced decline line, I see new all-time highs in the S&P 500 come early December, new all-time highs in the advanced decline line. And since we've gotten that pullback this month, we've gotten the pullback in the advanced decline line. The pullback in the advanced decline line much more severe than in the S&P 500, but nevertheless, no divergence. What that means to you, right? Every market decline starts with a divergence in the advanced decline line, but not every divergence in the advanced decline line leads to a correction. Is that about right?
Yeah, and we've seen that quite a bit. Also, when you look at some of the RSI negative divergences, that's like a lot of times those do resolve the upside as well. So we're in that funny period of the year where we can see these really whippy moves on low volume that can kind of distort things. So I think we'll know a whole lot more in a couple of weeks once we get a lot more volume coming back in, and quite a bit of macro stuff happening too, data wise. So just these, I think these are just some things to look out for in the new year. And it all comes as these strategists have been pumping out numbers that are somewhat bullish for next year's S&P 500 price targets, and way more optimistic than they were in the last 2 years looking ahead.
What do you think nobody's talking about?
Well, one of the quietest markets right now is what's happening in crude oil. So that's just hanging at 70. Its implied volatility is, I think I saw, multi-month lows right now. So, rising crude oil prices and rising equity volatility was certainly a trademark of the first half of 2022. If we see that perk up, that could definitely throw things off kilter a little bit, just because it seems like no one's talking about crude oil doing really hardly anything next year. So if we do see that start to rally, which, there's no real signs of that right now, it's just, pinned to the $70 here. But if that were to move for whatever reason, I think that could be a negative catalyst. But then, this is the time of year where it's, you start looking for risks everywhere.
Oil rallying is a negative catalyst for equities?
Yeah, I think that could be a possibility.
Throw up slide 2 there, please, Fonz. So this is how I see it. I see volatility here very compressed. This is like a Bollinger Band width sort of situation where, we're not looking at implied volatility in the options market, but more specifically in the equity, it's, in this case, a futures contract, but nevertheless, in the price itself, really just contracting to, like you said, kind of just pinned to that 70 level, right? Exactly what you just said. But we're quantifying that. And as we know, from volatility contraction comes expansion. I am not expecting a small move here, Mike. I don't know if the move in oil is going to be higher. I don't know if it's going to be lower. My crystal ball's in the shop. I don't know. Here's what I do have a strong suspicion about is that it's not going to be a small move.
Yeah. That's
do you have any would you agree with that? Do you think it will be a small move?
I would suggest I would agree that looking at this chart, if we take a measured move off the size of that wedge pattern there, you could definitely see a significant move one way or the other. And that's kind of the setup that you would be looking for in something like this. Is you wait for the pattern to resolve itself and then play what that move is. So it just requires some patience here. But yeah, you look at this consolidation, this squeezing, definitely suggests that a pretty explosive move is potentially in the works.
Yeah, I agree more. All right. Well, who's going to win the Super Bowl, Mike? How's this all going to end?
Well, I don't think you can wager against Mr. Patrick Mahomes
Is
in
it
the
is it
past
is it
couple of
that
years.
simple, bro? Is that it? Is this that simple?
It is definitely a keep it simple, stupid strategy on this, I think. Eagles are looking pretty good. I do think also it's, keep an eye on the NFC North. A lot of, good competition there could breed a pretty healthy set of NFC candidates from that area. Not my Chicago Bears. They're nowhere to be seen. But Lions, Packers, Vikings, each one of those I think is gonna. They're all testing each other, which it'll be something to watch in January.
All right, Mike. Listen,
you got?
I appreciate, number one, how you approach the market from a sentiment standpoint. Love that about you. I don't know how many finance bros out there were weather bros before. Not a lot. I don't think it's a lot. I think you were like in a unique camp and you lean in on that. I appreciate that.
Yeah, they tend to, weather bros tend to stay in the weather trading and natural, energy trading arena once they're in. So I broke out. I see what you did there. On that note, Mr. Mike Zaccardi, thank you very much, my friend. Happy New Year. We'll have you back soon. All right, man. Thanks, JC. Mike Zaccardi. That was fun. So we've got the Dow futures down almost 600 points this morning. That's 1.3% to the downside, with the Nasdaq at the lows of the session 1.6% to the downside for the Nasdaq 100. We've got the S&P 500 futures down almost 100 points. That's 1.4%. 30-year bond futures at 114, up 0.2%. So that's interesting. If bonds catch a rally, then I would imagine that's coming in an environment that the dollar is pulling back. I think if the dollar pulls back, rates are coming off also. Would you agree with that, Mr. Steve Strazza?
I would, yes, 100%.
How about the fact that the U.S. 30-year yield is making new 6-month highs, coming into the weekend anyway? U.S. 10-year yield making new 6-month highs coming into the new week. 2-year yields are not, and 1-year yields are actually going down. What does that mean to you?
That's positive. That's good
positive positive for the yield curve steepening or continuing to steepen, or positive for equities, or both?
That speaks to a good economy, right? If you got the low end moving lower, maybe because that's Fed stuff cutting, and then the high end keeps cruising, that's just speaking to a very, very bullish backdrop for risk assets.
And why is the steepening yield curve so good for stocks? And is that different now in this new type of regime, or you think that stays the same?
I don't think it's so much that a steepening yield curve is good for stocks. It's just that a yield curve typically steepens in a healthy economy, right? That's kind of what's normal.
Why?
The long end should move higher, faster than the short end.
But why? Like, why is it evidence of a strong economy that the long end of the curve is rising faster than the low end of the curve, or declining at a slower rate, right? Because it goes both ways, right?
Economic growth.
So that's what that means, economic growth, when long-term rates are going up faster than short-term rates. That's evidence of economic growth.
Listen, there's always a lot of things going on, but that's usually the main driver. Sure.
Does
also,
hold on, here's a question.
Yeah.
Go ahead. Also what?
The Fed is not in there buying the short end hand over fist like it was for the past decade either.
Yeah.
Right.
So we always quantitative easing that they were always telling me about, the QE.
QE's over, right? So that's having an impact.
How many were there? There was like a QE3 and then a 4. How many sequels did we have?
It went on forever.
We have a QE6. Did we get to 6?
I think we did, to be honest.
Does the short end of the curve catch up to the longer end of the curve? Does the longer end of the curve catch down to the lower end of the curve? Or does the steepening just continue through Q1?
I think the steepening continues. Yeah.
So the short end doesn't do anything, even declines, while the long end keeps rising?
I think so. Yep.
So if you're going to buy bonds,
Yeah.
you got to be in the short end if you're
I
going to
think
be
so.
long bonds.
I think so. Listen, I don't want to be long bonds on any end, but we got the
ever or just now?
2 years at 4.26, right? And effective federal funds rate is 4.64. Whew. So there's still a little gap there. That's interesting.
Where do fives play a role here? Are you looking at fives at all to get an idea, kind of somewhere in the middle, or are you ignoring it altogether?
Very little. I like to use the 3 month instead of the 2. So the 3 months at about 4.3. I would rather
fives are making new 6 month highs, 10s, 30s. It's the 2s that aren't, and the 1s are actually going down.
And even over in Europe, they're trying to make new short term highs.
We got Perz in the house. Why don't we bring on the resident futures man to weigh in instead of us two knuckleheads trying to battle this out. We want to bring in Jason Perz. Probably got the illest entry.
I love the comments in the chat because this is just a perfect illustration of how complex this shit is. I don't understand any of these comments in the chat. I just want to say that. I don't understand any of this.
Let me take a look.
We got a little bit of an echo, so if you're not on, just mute yourself. Jason, I guess whoever muted themselves, nice job. Jason, why don't you knock some sense into what's happening here? Short end of the curve, not going up. In case of the 1s, actually going down. 10s, 30s, continuing to make new highs. 5s making new highs. Bonds rallying this morning with stocks selling off, which is interesting. Thoughts on all of this intermarket stuff?
Yeah, I mean, it has a lot to do with the idea behind the economy or liquidity, basically. So if we're looking at the short end of the curve, this is what the Fed is at. They're pinning the shorter end of the curve. They're trying to bring it down. The banks usually borrow money from the short end of the curve. So this is where the Fed rate, the 2-year, comes from. And then, we basically, us plebs out here, we're all out here borrowing from the long end of the curve most of the time. You're talking about your mortgage rates and so on. As long as the shorter end of the curve is lower, the banks tend to lend out more money, which creates more liquidity, which is why a curve steepening is a good thing. And I think the same thing as Steve does. I think this will continue. I think it continues through the Q1 at the very least, maybe Q2. I'd be surprised to see it stop. There's no reason to think that at the moment. The way inflation looks, the way the Fed is kind of bringing down rates at the same time as inflation is kind of moving up. Growth in the economy doesn't look too bad, and so once again, it's a positive economic outlook. But also, like you guys were saying earlier, there are some things to worry about in the market itself. So I do think there's a positive outlook long term. Short term, we got to pay attention here.
You think rates and dollars keep moving together, though?
I'd be surprised. Once again, we continue to kind of highlight this dollar thesis, right? The dollar is in a range. The dollar is breaking out of a range. What does it look like after this? I think it's very important to pay attention to the dollar here. If the dollar comes back in the range, I think that's saying something, but I don't think it's saying much about what direction yields are going.
So you think that relationship is ready to break?
Yes, I do think that relationship will change. I think that relationship isn't going to stay forever. It usually doesn't. It usually lasts during certain periods of time. And it all has to do with the economy, right? We got growth, we got inflation. As long as these two things are kind of warring with each other and people are kind of undecided on which direction these are both going, we're going to kind of see the dollar and rates kind of move two different directions. And so as long as we're kind of seeing that happen, I think that's going to probably break down. And I do think the dollar probably is going to go down at some point. I can't see a situation where anybody would just let the dollar continue to move up. To me, it's a headwind. It's not something to take lightly or not pay attention to. I just think it's not in the interest of any country, the Fed, and so on.
if rates were to continue moving higher or sideways with a higher bias, I think that'd be okay for risk assets. I think speculative growth stocks have told us in a big way, hey, we're fine. That's okay. We're good with where the bond market is right now. Dollar, on the other hand, I don't think would be so fine. So the scenario that you're kind of outlining, I kind of like. If that relationship does break down, dollar back in the box, I think rates can stay elevated. Again, that speaks to a strong economy, a healthy backdrop. But I don't want the dollar up there with interest rates.
Yes.
I think what we need right now is a good old-fashioned Economist magazine cover.
I thought you were going to say Larry McDonald.
George Washington flexing with his tank top on. Come on, guys. Give it to us. Give the people what they want.
You're not wrong. That would be great.
And it can happen.
Talk to me about these commercial hedgers in the euro, Jason.
Oh yeah, so we were talking about it last week, and it is very interesting to kind of see so many commercials, and basically across the board, they're just buying this dip in the euro, and so it's once again, if we're going to see a reversal in the euro moving higher and the dollar moving lower, because as you guys all know, the Dixie Index is primarily the euro. As long as we see this kind of, it's a great time for the euro to move up, the dollar to move down. I think too many people are, once again, just going, it's consensus now. The dollar's just going to move up. Strong economy, strong United States, strong president, so on. Like there's all these reasons to be bullish the dollar here for people. However, the commercials are saying something different in the euro. The commercials are also saying something different in the dollar. They continue to sell dollars up here. So once again, it's definitely a time to take a look at this, pay attention. If it stays outside the box, once again, that could put pressure on the equities. It could put pressure on commodities. However, something to talk about as well is the commodities are looking pretty good considering the dollar being up here. Commodities have held up really well in the last couple of weeks. The market is going to come under some pressure, and the commodities are still holding up very well. Heating oil up 2.5% today. Natural gas February contracts up over
20% for natural gas.
20 now? Oh my gosh. So I haven't even looked right now. So 20%. And once again, this is why diversification works. This is why at All Star Charts we talk about all these different things, because maybe your equity positions aren't doing well, but I can tell you my commodity positions are doing really good today. Heating oil, natural gas, these things are up 20% now. Heating oil up almost 3%. These are big moves that are happening. It's just not in areas that everybody trades.
And it comes back to uncorrelated assets. Natural gas doesn't care what your NASDAQ 100 is doing. Natural gas doesn't care what the Dow is doing or what European banks are doing. Natural gas is going to do what natural gas does, regardless of what's happening in precious metals, right? Or in interest rates. Natural gas is going to do its thing. And I love that about it in both directions, by the way. The equities market could be killing it and natural gas getting slaughtered. Equities this morning getting hit, natural gas up 20%. One of the greatest days in the history of the natural gas ETF coming in. Just right.
Yeah.
It comes back to the Ray Dalio. The only holy grail out there is adding additional layers, adding additional strategies that are uncorrelated to what you're doing. And I can only speak for myself here, but as somebody who has as much long exposure as I have, whether it be in retirement accounts, in long-only portfolios, in children's college funds, in the real estate that I own, I'm looking to buy more real estate. I have so much long exposure, regardless of what I'm doing in my trading accounts, that I'm constantly striving to find opportunities with uncorrelated strategies to increase that diversification. And again, I know you know this, Jason, but for those of you listening out there, diversification does not mean sacrificing forward returns. In fact, it's actually the opposite. By having 2, 3, 4 uncorrelated strategies to your core portfolio, not only are you not sacrificing forward returns, but that decreased volatility in your returns actually accelerates the compounding of your returns moving forward. So not only are you not sacrificing forward returns, you're actually making more money faster, which is a concept that took me a long time to understand. And it wasn't until I started accumulating real wealth that I really started to understand how important that was. Not only are you able to sleep better at night, you actually make more money also.
And I think this is it's a timely conversation because everybody, when the market's going down, you watch all these traders and they're all losing their minds, and it's like, hey, there's other areas that are doing well right now, or there's something else you could be buying that might make sense. And not to mention, like you said, like I think all of us could do with a little bit more diversification. In the United States, especially, we think, the U.S. stock market. I have a retirement account. I got a mortgage on my house. I have a ton of debt. I'm doing great. And really, it's a take some money, put it into this area. Commercial real estate. You got some into housing. You got some into gold. You got some into the stock market, retirements. Like this basically creates these uncorrelated return streams that you're talking about. It's a very simple way for people to do it, and you don't have to have a ton of money to do it. You should start with nothing. You should start with a little bit of money, put it into a little bit of each of these strategies, and just kind of build on it. And over time, your money will be protected. And that's something that helps you trade better. I think that's something that people don't understand. For me, I trade my best when I'm putting money into different areas and I'm sleeping well at night, because if my trading isn't going well, I know other areas of my life are just fine and my family's taken care of, my life is taken care of, and that's really what matters.
I like where your head is at, in terms of you're able to trade better knowing that, not everything is riding on this one trade or this one direction. You got other things going on. And again, that's something that took me a long time to figure out as well, but you're spot on.
I just think that this is something that I tell traders all the time, which is like, if you're trading with your positions and you're coming into the stock market and everything's riding on, this is why everybody gets stuck on these 1-day trends. You need a big 1-day move. Oh my gosh, I'm down today. Oh my gosh, I'm up the next day, and your mood swings with it. Same with week to week, month to month. Really, your goal is to produce good returns each year. So this is how you have to think about it as a trader: produce good returns each year. The shortest time frame you should be in is maybe quarterly, and this way you're not stuck on this, hey, I got to do very well every single day, or I'm not worth anything and I'm a terrible trader. Like, there's no trader who's right every day. There's not a trader that's right every month. There's no trader that's right even every year if you look at the long-term track records of some of these guys. So understanding that is very, very helpful, and it frees your mind to concentrate on what's important.
And you got to know that going in. Like, this can't be
Yes.
like a surprise. Like, oh, wow, I don't make money every day. Yes. That's right. You know that going in.
Well, it's funny for me because as a trader, when people give me their money, they think that, okay, I've given my money to a professional, therefore professionals are right all the time. I should never lose money. The market's just going to go up for me forever and ever and ever. And it's not true. The idea of professionals is we have better risk management. We can produce good returns and great returns year after year. So positive.
By the way, I would not put you in the same camp as other professionals. I would argue most professionals just have more money to lose. They're not doing anything any different than the individual. So I would put you in a separate camp, with professionals who understand the way this works rather than just professionals. In fact, we look at other professionals as a contrarian indicator,
for sure,
oftentimes as well. So let's remember that.
But just talking about it as in what the client thinks. That's what I'm talking about. So, if we're talking about my returns, I've outperformed the S&P for many years. I've done very good for a long period of time. However, we're looking at the very long-term track record of some of these people and just understanding that not every month is going to be perfect. Not every year is going to be perfect if you're looking at 30, 40 years, but getting it right in the long term, that's how you compound money. That's how you make wealth, and that's how you diversify.
All right, why don't we do a little recess and get out of here? We got some work to do. Market's moving. Dow's down 625 points. Let's roll. Hit it, Mr. Spencer. I just want to give a shout out to the Hall of Famers. I've been talking about it a lot lately. I've been writing about it a lot lately. I'm going to put this in the chat here. If you guys can drop that in the Slack, Spencer. This has been top of mind for me really over the last week. Not only did we just run the Hall of Famer scan, but I actually we dedicated a full week in our 12-week mastermind to understanding the value of these mega cap stocks, how they're so important. The truth is, this was really just a way to understand the direction and health of the overall market. We used to look at the Dow 30 stocks and, take the sum of the parts to decide whether this was a healthy environment or a weak environment. And that was really, really helpful. Spencer just dropped a link in the Slack so you could see this week's results. But as it turns out, yes, that actually became very valuable to look at the top 30 stock and then expand on that because, of course, there are other very important market bellwethers that are not part of the Dow Jones Industrial Average. So it's actually the largest 150 companies in America, and this has helped tremendously. If you get the direction of these right, you're going to get the direction of the market right. That's just what it is. And that theory was proven valid. Here's what I did not quite realize. How many actionable opportunities would come from this list on such a regular basis? And in hindsight, looking back on it, well, these are the best stocks in the world. So, duh, of course we're going to find good opportunities. Well, I guess I underestimated that part. But yes, tremendous opportunities on a regular basis for good reason. These are literally the best stocks in the world. Facts only. And then in addition to that, if you're an options trader, this is perfect because almost all of the names on this list have liquid options markets. So, great opportunities, liquid option market, tremendous top-down perspective. One of the best things that we do, in my opinion, by far. Like, I know it's sexy to talk about the short interest list and it's sexy to talk about the 2 to 100 club that looks at the growth stocks. Yes, all of those are great. But I got to tell you, this has to be in the conversation as one of the best things that we do as a company. Any pushback there from either one of you two?
No, it's a staple. That list is always good. 2 to 100, freshly squeezed, they get a lot of love because when they're good, they're really good, right?
Mm-hmm.
In the right environments. Hall of Famers is all reliable. There's always something there. Any environment. I'm with you.
Yeah, that's probably true. Natural gas up 23%, by the way.
It just keeps going.
Nvidia is also up. I got a couple things here. Speaking of Hall of Famers, I just got extra long Nvidia. This is the trade of all the trades right now. There's the Nvidia trade, and then there's everything else. This is just a no-brainer. Got burnt last week on my super short dated calls. We are already long some responsible 25 delta calls going out about 2 months. Today, I just added exposure to short dated calls in the Nvidia 2X leveraged long fund. Also, I will be taking a trip down through the East Coast. Might be stopping to see Jason. Might even do a surprise visit for the one JC Parets. I don't know. I think we're planning to stop in the Smoky Mountains, maybe Boone, North Carolina, Nashville. We're going to Nashville. Might even go to New Orleans. I don't know if we'll have time. But if you're in any of these places or along that route, slide into my DMs. Let me know. Maybe we'll hang. Maybe we'll hang.
When you're back in Baltimore, go to the Charleston for dinner in Baltimore.
Okay, yeah.
If you're in Nashville, I got you in Nashville too. Stay at the Four Seasons, great spa there.
I was gonna ask you.
Yeah. Go do the spa at the Four Seasons. The chicken, the fried chicken, the Nashville fried chicken is legit.
Yeah,
legit.
I can't wait. So does it make more sense to roll through Nashville during the week, or should I be there on a weekend? Or does it not matter? It's one of those cities where it really doesn't matter.
It's a good question.
Right?
It's a good question. It'll be more wild on the weekend, obviously.
Yeah.
So I don't know if you want that or not.
Is it too wild? Is it too wild? I've heard it's crazy town.
No, it's not too wild.
Okay. All right. Great.
I mean, you live in Key West, so it's not. I mean, it's like Duval Street with more cowboy boots.
Oh, that's cool. That's neat. Can't wait to see it.
Fewer freaks, younger girls.
And then the last thing I think we need to talk about for recess, JC, what the hell happened on Saturday? Do I just not understand college football? Am I the only one who's outraged that our best player doesn't finish the most important game of the season? I wanted the Giants to draft Cam Ward. Now I wouldn't touch this kid with a 10-foot pole. How do you not play the most important game of your life?
First of all, number one, that wasn't his decision. That was Cristobal's decision because you want to check out the other quarterback to see if he's going to be your guy next year. Number one.
Check out the other quarterback.
Stop. Number two, this is not the most important game of his career. He shouldn't have even played, if you ask me. So I give the kid a lot of credit.
What was the most important game of his career then?
Dude, he's the greatest. He's the greatest athlete, arguably, to go through the University of Miami. ever.
Stop.
Period. This is a meaningless game. What is it? The Pop-Tarts Bowl? Are you fucking kidding me, bro?
The sideline reporting for that game, they need to fix that.
Wow, I can't believe the media got something wrong. That never happens.
They got these guys dressing up as Pop-Tarts. It's absolutely
Yeah, they're taking their clothes off. I mean, it was those are the people you're going to trust, or you're going to trust your boy. Come on.
Listen, when you're about to be drafted, in the top 5, top 10 of the NFL draft, I think you want to play in important games. Finish your season.
Well, you know nothing about college football then. No.
But then what? Isn't there a problem for college football if the best
college football's got a lot of problems
in bowl games? Like
college football has a lot of problems. Yes.
It's no good. It was no good.
Well, if him not playing the second half stops the New York Giants from making a decision, that would just be another decision on the list that the New York Giants have made. That is terrible.
I hope they don't.
So par for the course.
Well, the New York Giants amazingly blew their season twice in 1 year this year. So that's what it's like to be a Giants fan.
All right. Well, Saquon looks good though.
All right, guys, this has been fun.
Jason, any final thoughts, my friend?
No, man. Excited for this week. It's exciting to get back into a new year for me. I always love to close out all the trades for the year and move into a new year and just start.
Do you do that? You close everything out?
Yep. Not close it out, but just start over. I don't close out my trades. I just start over.
But like mentally,
yes, mentally go back to zero.
If you were 100% in cash, would you buy this today? And if the answer is yes, you leave it.
Yep.
All right.
That's great.
Mm-hmm. Cool. Start over all over again, back to zero. Last year's returns don't matter. You got to do it all over again if you want to be great. So just start over.
Yesterday's home runs don't win today's ball games.
Yep, that's the truth. So let's start over. Let's start fresh. I'm excited to start a new year.
Let's go. YOLO responsibly. All right, guys, we'll be back tomorrow morning. There's going to be no show on Wednesday, but we'll be back tomorrow. Last day of the year. Same bad channel, same bad time. I'll see you there. Adios.
Later, guys.
I can't take no loss. I don't even know what it costs.